Okay, go
All
ahead.
right. Hello, everyone. Thank you all for continuing to join us throughout the day here at the Lytham Partners Spring 2024 Investor Conference. Again, my name is Robert Blum, Managing Partner of Lytham Partners. Up next here, we have a discussion which we hope you'll find insightful with Rob Charron. Rob is an attorney with Ellenoff Grossman Schole, LLP. And I've asked him to join us today to discuss the new T+1 settlement, which was just recently enacted here. Rob had, or his firm had sent out a client alert a few weeks ago on the subject. I was sort of going through it, thought it was an incredibly important topic and one that I wanted to have him join us. So Rob, thank you first off so much for joining us here today.
Thank you. Nice to be on.
Great. So we got about 15 minutes. Let's dive right in. High level overview, talk about what T+1 is, sort of the differences from the previous systems that were in place.
Sure. So on May 28th, 2024, the SEC has enacted basically or mandated that all settlements of trades, the purchase and sale of securities, go from what was essentially before T+2, which is trade date +2, to trade date +1. And what that means is, in very, very simple terms, if you are selling a security, for example, in the past, actually prior to this, it was T+3, believe it or not, which seems like an eternity now. But what that basically means is that for people who are buying and selling securities, and really in the public markets is where this applies. If I sell a security to you, and I enter into a contract and we agree on a price and we have a contract to buy and sell, I basically at this point, I have not 2 days to deliver that security, but 1 day. And the way that you hear this phrase T+1, T+2, T+0. Basically, the way it works is the first day after the trade is made is called T+1. So if I make the trade today, tomorrow is, well, if I make it during the trading day today, today is T+0, tomorrow's T+1. So I'd have to settle with you or deliver the security tomorrow. If it's after the market closes, technically, the next day is actually T+0. So I actually have the following day to settle the trade. Overall, what this means is everything is compressed. Again, it's compressed by half. It used to be 2, it's now 1 day. And I think, and I was, one of the memos we wrote, I think for the most part, many of the transactions that are occurring now in the marketplace, which are mostly between buyers and sellers of stock in the NASDAQ, on NYSE. I think for the most part, they've already been complying with this. In fact, I think most trades now are done almost instantaneously. So going from T+2 to T+1 is really not going to affect sort of ordinary course or ordinary transactions that are done through the market. I think where this is really going to have much more of an impact are on situations where issuers or where people are buying securities, for example, from issuers directly, and what we call registered direct. You'll hear the term RD, registered direct, CMPO, confidential market public offerings, IPOs, initial public offerings, things like that, where an issue, someone is buying a security from an issuer, and then the issuer effectively needs to deliver that security. And the reason why, not to get too much into the granular, but the reason why this is especially important for buyers of securities from the issuers is not necessarily because of the transfer from the issuer to the buyer. It's because in a lot of instances, and again, we're talking, just to be clear, we're talking about registered securities here, not unregistered securities. Right. Although it still applies to them, it's not quite the same issue. The reason why is if I'm buying a registered security from an issuer, I could theoretically, that's registered free trading, I could literally turn around and sell that security once I have the right to buy it. So I sign a contract with an issuer, I purchase that security. If I then turn around and I immediately sell that security, like in my brokerage account, wherever, now I have to deliver that security to the buyer within T+1. So I have to make sure, but I don't actually have that security, right? I bought it from the issuer. The issuer has to now issue that security to me. I have to turn around immediately and deliver it to the buyer. So that's where sort of the time crunch really comes in. When you see a lot of these transactions, especially with hedge funds or even retail deals where registered securities are being issued, it's really going, the time crunch is going to be at the time where, or at the point where the buyer of the security from the issuer is now trying to settle trades that they made based on their purchase of the security. So they're flipping that security. I'm going to stop there and just let you.
No, so I think what we're sort of getting at here is most of the traditional operations, the market, traditional buying and selling, whether you're a retail investor, institutional investor, most of that's already adapted to
Correct.
T+1.
Yeah, I think that's right. I mean, I don't really see it making much of a difference. I mean, I think it was intended. I think the rule change was intended to clean up the general markets and sort of the ordinary trading. Like, you know, they wanted to get away from a situation where people could maybe game the system, or, you know, they wanted to basically make it more efficient. So there was, you know, this, for example, I have an account with Schwab. I sell my security, and for whatever reason, the brokers don't deliver that secure. I don't know why they wouldn't, but they don't. I mean, I think all this was meant to do was to tighten up that segment of the market. I'm not entirely sure that the intent was to really deal with what I do, which is direct issuances from the issuers, or purchases from the issuers, and then the subsequent sale. I'm not sure it was entirely meant for that, but I do think that's where it's going to have the biggest impact.
So again, biggest impact is going to be on the investment banking side of the market. And again, it's sort of that third.
Hedge funds, investment banks, retail buyers of new issuances.
Right, where the hedge fund is able to sell the shares before they even get them, because they have a
legally they can.
They legally can, but it's getting them from the issuer to the fund, to the hedge fund to the secondary buyer. That now is compressed. Do you think that has an impact then on the way some of these transactions may occur in the future? Do hedge funds, has that been an issue in the past, and might it impact some of the way that deals are done?
It's not going to impact the way deals are done. I mean, we've already, like we did when they went from T+3 to T+2, you know, we've already made the changes to the various different documents with the issuers that require delivery. You know, again, I think where this is going to have the greatest impact, unfortunately, is it's going to put a lot of pressure on the issuers to make sure that at the time that a deal occurs or is priced, that they have everybody on board. You know, where before you had 2 days, and before that 3 days, you know, you could sort of sign a deal and then, you know, the next day call up the transfer agent, and, you know, whoever else you needed for, you know, maybe the lawyers for the opinions, or maybe there's a comfort letter that required to be delivered from the auditors. All of that stuff is just now compressed. So I think the only real impact it's going to have is it's going to require the investment banks or the hedge funds and the issuers to make sure that they really have all their ducks in a row before they go out with an issuance of a new issuance of securities, to make sure that, because the investors themselves are going to basically require in any documentation, for example, that the company deliver the securities within T+1. And if they can't deliver with T+1, there's going to be, my guess is there, you know, most documents are going to have consequences, whether those are, you know, monetary damages or some other sort of remedy in the documents. I mean, that's probably the biggest issue that I see, is it is going to put a lot of pressure on the issuers to make sure that they can perform in a timely basis.
Where is the biggest bottleneck? Where is the biggest potential bottleneck? On the transfer agent, right? Do they?
I'm not saying anything bad about it. I just think I don't mean to offend the transfer agents. I mean,
yeah.
You know, and although I think, you know, really truly looking at it, I think, you know, if we were talking about should this rule change 5 years ago, I think it would have been a much bigger deal. I think that things have come a long way in the last 5 years, that, you know, so much is done now through the word I'm looking for, not direct deposit, but, you know, with securities, electronic delivery. I'll just say that. Book entry. That's what I want to say. Book entry, electronic delivery. I think you know, the DWAC system has gotten a lot quicker and more efficient. So I do think that it is going to put a lot of pressure on the transfer agents to deliver quickly on instructions. But I actually think that most of them are probably set up to be able to handle this at this point.
So you do think most of them, I mean, in your experience, again, you do this sort of every day. Are most of them delivering them? Have there been issues that you've encountered here recently?
There's always issues.
There's always issues.
Usually doesn't have to do, it usually has to do with someone's on vacation and
Right.
didn't see the email, or, you know, the issuer just didn't give the instructions on time. I mean, I think most of the documents when it comes to new issuances it's pretty draconian if you fail to meet the delivery requirements. So I think most issuers are pretty wise to the fact that they have to really get this done. So yeah, I mean, I mean, personally, I would love it to say I like T+3 the best, because it gave us time to really, you know, work on closings, and, you know, things weren't done in a crazy hectic way. T+2, okay, we dealt with it. We'll deal with T+1. It's just, it's going to put a lot of pressure on the deal participants.
So, you know, maybe taking a step back here, the transition from T3, T2, T1, technology has enabled it, number one, but has there been other reasons why the transition has occurred?
Not so. I think it's, I mean, my personal opinion, I think it's technology. I think it's just technology. And I mean, again, I haven't researched it enough to know whether or not, you know, when the staff came out with, you know, are they concerned? Do they think this is going to cut down on market manipulation?
Right,
Maybe.
that's where I'm leading with this.
Maybe.
Yeah.
I'll be honest with you. I don't know a lot about that. So I don't really know trying to think of how that factors. I mean, in what we do, I don't think it's going to really have any impact on reducing. I think it's just going to make things move faster. But I do think the technology is there.
Right. All right. So base takeaway for most public company executives that are sort of listening here today, get your ducks in a row, make sure you got proper transfer agents that have counsel that sort of knows all the ins and outs to make all this sort of come together. Any sort of further takeaways you'd advise, and obviously how people can get a hold of you to discuss how you might be helpful to them.
Sure. You know, emails are Charron, RCHARRON @EGSLLP.com. Happy to, you know, if you reach out to me, I'm happy to talk to you about this or anything else in the cap markets space. I don't really have any other takeaway. I mean, like I said, I think, you know, I will tell you some of my partners are very nervous about this because, you know, it's just going to put a lot of pressure on everyone to get things done faster. But you know, we scratch our heads over T+3 to T+2. I think we're going to figure it out.
Somehow we always figure it out, right?
Always figure it out. Yeah. Technology is the key. You got to be good with your computer and your mouse.
And fantastic. All right. Well, Rob, thanks so much for the time. Greatly appreciate it. Again, to get a hold of Rob, he gave you his email there. Anything I can do to help facilitate any introductions as well, please reach out to me. My email is Blum, BLUM, @lythampartners.com. So we hope you all continue to enjoy the conference. Again, Rob, thanks so much for the time today. Greatly appreciate it.
My pleasure.